All right, let's talk about the Japanese tech company ILL Inc. They just dropped their latest earnings report, and honestly, it's pretty impressive. So we're going to break it all down and figure out what's really driving their incredible growth.
Okay, boom. Right away, this is the number that just grabs your attention. We're talking a 23.4% jump in operating profit compared to last year. I mean, in this economy, that kind of growth is just huge. And you know what? It's not an accident. It's all thanks to a really smart, deliberate strategy.
So that's what we're here to do. We're going to go way beyond the headlines and really unpack the strategy behind these numbers. What's their secret sauce? What's the magic that's making this all happen? Let's find out.
All right, first things first, let's take a step back and look at the whole picture here. Because that 23.4%, that wasn't just a lucky break. It was part of an amazing performance pretty much everywhere you look.
And here it is. The big takeaway for me, it's the consistency. I mean, look at this. Double-digit growth across the board. Sales, up over 11%. Operating profit, that massive 23.4% we just saw. And net profit is right up there with it, almost 23%. It just shows you the whole business engine is absolutely firing on all cylinders.
And this number? Wow. This shows you just how efficient that engine really is. An operating profit margin of 26.2%. Think about that. For every single dollar they make in sales, they're keeping more than 26 cents as pure profit before taxes. That just screams a super refined, really powerful, and incredibly profitable business model.
So you gotta ask, how in the world are they pulling off margins like that? Well, it all boils down to this one core idea they have, something they call the crossover strategy. And believe me, this is the foundation for everything they do.
Okay, so what is this crossover thing? Here's the key. ILL doesn't just sell one piece of the puzzle. They're all about bridging the gap between a company's, let's say, real-world internal stuff, like inventory and management, and their web world, online sales. They want to be the one-stop shop that connects both worlds seamlessly.
So, on one side of that bridge, you've got Aladdin Office. That's their workhorse for all the internal business stuff. Then, on the other side, you've got tools like Cross-Mall and Cross-Point that are all about e-commerce. By providing the best of both worlds, they basically become essential to their clients. It's a win-win. The client gets more efficient and sells more, and ILL becomes indispensable.
And here's the really clever part about how they make this work. It's how they're structured inside the company. They call it integrated sales and production. So instead of a salesperson just taking an order and tossing it over the wall to the tech team, imagine the salesperson and the engineer are sitting right there, side by side, building the solution with the customer. It's a game changer. It means they build exactly what's needed the first time. The accuracy and customer happiness just go through the roof.
Okay, so we get the strategy now, right? It's pretty cool. Now let's dive back into the numbers and see which part of this whole machine is really putting the pedal to the metal.
And here you have it. No surprise, the system solutions part, that's where Aladdin Office lives, is the absolute heavyweight champ. It's bringing in a massive 88% of the revenue. Now you might look at web solutions and think, well, only 12%, but don't be fooled. It's that crucial other half of the bridge. It's what makes the whole crossover strategy actually work.
So, what was the fuel in the tank this quarter? Well, it was a few key things. First, orders for their main product, Aladdin Office, just kept pouring in. Demand is super strong. Second, they actually raised prices on their e-commerce services and got away with it. That tells you their customers are locked in and happy. Plus, they're pushing into new industries and, my favorite part, they're growing that sweet recurring revenue. That predictable stock income that investors just love to see.
Okay, growth is one thing. It's exciting, it's flashy, but is it sustainable? Is the company built on solid rock or on sand? Let's check out their financial health and find out.
And this number says it all. 70.5%. That's their equity ratio. Now, if you're not an accountant, don't worry. All you need to know is that this is an insanely good number.
Let me put it this way. Over 70% of the entire company is funded by its own money, not by debt. They're not borrowing a ton of cash to look good. This makes their balance sheet an absolute fortress. It means they are super stable, super low risk, and can pretty much handle whatever the economy throws at them.
But here's the thing about companies like this. They don't just sit back and admire their fortress. They're already building for the future, investing to make sure this success story keeps on going.
So what are their big moves? Well, they're making 3 key bets. First, they're rebuilding their tech from the ground up, using a microservices architecture, which basically makes them way more flexible and fast. Second, they're jumping on generative AI.
not just for their products, but to make their own teams work smarter. And third, they just keep funding R&D to stay on the cutting edge.
And this isn't just talk. They're putting their money where their mouth is. 28 million yen spent on R&D in just this one quarter. That sends a really clear signal, right? They're playing the long game. They're focused on innovation and leading the market for years to come, not just squeezing out a profit tomorrow.
So, let's wrap this up. You've got this unique crossover strategy, you've got amazing financial numbers, a balance sheet that's built like a tank, and a serious focus on the future. It really makes you wonder, is this the new model for success in Japanese tech? This perfect blend of the real and the web? I don't know for sure, but after looking at this quarter, ILL Inc. is making one heck of an argument.